Live from Sydney, this is Insight with me, Heidi Stroud-Watts, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, oil prices are surging after reports suggesting Israel may be preparing a potential strike on Iran's nuclear facilities. That's raising further concerns about the fate of negotiations on a deal with the US. And as the uncertainties around geopolitics and global trade ramp up, Fed officials are talking of patience as a virtue when it comes to policy.
Right now, I think the best action we can take is to sit on our hands and really carefully go through the data.
We're watching the data, and we have a little time to be patient.
And Tesla CEO Elon Musk tells the Qatar Economic Forum that he plans to focus more on selling cars and a lot less on politics.
In terms of political spending, I'm going to do a lot less in the future.
And why is that?
I think I've done enough.
Plus insights on the global economy and these markets with IG Australia market analyst Tony Sycamore and Asia Decoded founder Priyanka Kishore. Let's get straight to our top story. Investors are eyeing geopolitical tensions across the Middle East, with oil prices popping after that CNN report that US intelligence thinks Israel may be preparing a strike on Iranian nuclear facilities. Any such attack could hinder progress when it comes to US-Iran nuclear talks, already under pressure, with Tehran insisting on the right to enrich uranium. Avril Hong has more on this latest market moves. It's interesting, Avril, this is just, of course, one report that we've been honing in on, but the reaction has been huge. What does that risk premium look like when it comes to crude right now?
Yeah, Heidi, I mean, to your point, we're seeing oil prices, particularly on the U.S. crude futures earlier, popping as much as 3.5%. But it's really, at this point, a report from the CNN that is quite vague, and it's citing unnamed U.S. officials. Along with that, it's also not clear whether Israeli officials have made any final decision. And it also seems to be less about Iranian supply, but more about whether they could potentially choke off the Strait of Hormuz. That being said, the price surge in oil just shows you how jumpy traders have become, because this comes off a pretty volatile week for oil prices after mixed headlines on whether the US and Iran are making any progress when it comes to talks. Remember, some of our Bloomberg intelligence analysts have highlighted that if these sanctions on Iran are lifted, we could see oil drop to as low as $40 a barrel. So that's what we're seeing in terms of oil flip the board, because also climbing today are the Asia energy stocks. And it's the sector that is among those that are outperforming on the region stock benchmark today. Aside from that, of course, we're seeing that demand for safe havens briefly as well for the yen, Swissy, gold. And this is falling on from some semblance of calm returning to markets in the past couple of weeks following a really wild month of April. And of course, not really benefiting from any safe haven demand was the greenback. It's kind of fallen out of favor as a safe asset. Heidi.
Avril Hong there, and let's take a close look at the outlook when it comes to oil markets, given the overlay of geopolitics. Our senior energy reporter, Stephen Stepczynski, joins us now in Singapore. And Stephen, for the second half of the year, it's looking like these geopolitical uncertainties really are holding a bigger counterweight to perhaps the fundamental expectation of looser balances in this market.
I think you need to look at this in two different ways, right? We're in the $60 range for Brent oil. And that is driven by fundamentals, right? That is an oversupply in the market. You have shale that is still quite abundant. You have OPEC Plus increasing output faster than the market was expecting. And you have potentially weaker demand from China because of the trade war. So that's really brought the whole complex down to this $60 range. Now, the fine tuning, which is the day-to-day moves, the spikes and the drops of $1 or $2, that is being driven by geopolitics. And clearly, the story today with CNN's report that they had U.S. intelligence showing that Israel might be potentially planning a strike on Iranian nuclear facilities. Yes, that is leading to higher prices. Now, Goldman was earlier on Bloomberg TV today, and they were saying that if you remove the 1 million barrels a day of Iranian oil output from the market, that could result in about an $8 increase in oil prices. Now, obviously, the market hasn't reacted that much, but they're still worried that if there is any impact on oil, if there is any impact on the Strait of Hormuz, you will see a tightening, you will see a jump in prices, and that's likely what traders are doing. They're positioning themselves for potentially more news for today.
Stephen, what about the other parts and segments of this market, right? Be it the demand side coming from a pause in tariffs or even the fact that we perhaps haven't seen US shale peak either?
Yeah, I mean, I think, so you have to look at this in different ways as well, right? So you have the Chinese demand, which is a big story. So when the trade war was in full swing, you had 100% plus tariffs on both sides. There was a real fear that that would sap industrial output and therefore oil demand in China. Now that we've kind of pulled that back, right? Now that there's been some sort of truce and tariffs have been reduced quite significantly, that could result in higher oil demand, but it's still unclear. The trade war is ongoing. Chinese demand is all but certain. And at the same time, like you said, shale output, has it peaked? Has it not peaked? It really depends on who you ask, right? We had a Conoco's chief on that Bloomberg Qatar forum, economic forum, just yesterday, and he was saying that at this current level, we're basically break even. If we fall further, then yeah, shale output maybe peaks and you'll see production decline, but we might not be at that level yet. If you ask other producers, they say we're well in that level, and they're already taking rigs off the market. So it sort of depends on who you ask. $60 WTI is not exactly the worst pain point for shale producers. It's not the best for them. You're not going to see a huge increase in production, but you're at this level where things could kind of plateau going forward. I think there's going to be a lot of focus. Does WTI and does Brent, do they go into the $50 range, and is that sustained at that level?
So much of this depends on what happens when it comes to Iran, right? And certainly the messaging from Tehran, from the Supreme Leader, doesn't seem super optimistic in terms of a deal.
Right. He said he wasn't sure, as you said, he wasn't sure if anything will come out of the discussions with the United States this time. You know, I think another thing the market has been really focused on is Trump's hard line, right, on Iran. And yes, he does want to make a deal. He wants to be seen as someone who is able to make agreements with nations. He'll talk to anybody. But getting Iran to agree to a nuclear deal, when you have so much conflict in the region, when you still have issues with Israel, it might not be something that they can reconcile. And so even if you're the most optimistic, any sort of agreement will take quite a while to negotiate, even if you do have any near-term breakthrough, which we've seen through some reports that there have been some agreements or there have been some concessions. It's still unclear whether or not a larger deal will be made where the U.S. gets rid of sanctions to allow the free flow of Iranian oil. And if that does happen, yeah, we will have a much more bearish market. And you could see, according to Bloomberg Intelligence, oil prices fall to $40.
Bloomberg senior energy reporter Stephen Stepchinsky there in Singapore. Let's get some more on these energy markets and the geopolitical uncertainties. Tony Sycamore, who's a market analyst at IG Australia, joins us now. Tony, great to have you with us. So, you know, we keep saying that this is obviously just one report citing intelligence reports in itself. But what do you make of, I guess, what it tells you about the level of uncertainty across geopolitics at the moment in the Middle East?
Twitchy markets, and for good reason. I mean, there's obviously hopes that there could be some sort of concrete agreement come out of the US-Iran talks, but I think it's highly unlikely. It's not the first time we've heard reports of Israel targeting or contemplating attacking Iran's nuclear facilities. Now, Iran's always been very adamant that the rights to these facilities are non-negotiable, but when you look at Israel at this current point of time, the proxies that Iran has had supporting it in recent years have been significantly diminished in Syria, in Lebanon, and also in Gaza and, of course, in Yemen. So if you're sitting there in Israel and you think probably this is a good time to go, you have to give this report a little bit of credence. Now, I suspect that the cooling in the price since that initial spike does reflect we need more information. And when you look at the price of crude oil over the past 8 weeks, it has been very range-bound between $55 and $65 on the top side, and it spiked up towards that $65 level and backed off again today. So I think we need more information. We need more clarity on what is going to happen with regards to Iran, any potential deal, any potential attack, to see it get above that $65 level. And if it does get above there, then there's no reason it can't push back up towards $70.
There's not a great deal of information in general when it comes to what's going to be driving the next leg of any of these rallies that we've seen, right? And if you kind of take a look at equities, and I suppose that's the risk that's being expressed in the longer end of the Treasury curve at the moment, do you feel like investors are sort of, hoping on fumes at the moment with not a great deal of caution?
There is a lot of there's a lot of hope out there. I think you mentioned there's a lot of uncertainty out there, and you can see what's happening to yields. You've got the tax bill being discussed. Geopolitics, of course, is playing a huge part as well, and I feel like there's a lot of lip service being played around the US at this point of time. I just can't see any resolutions coming out of those talks, whether it be with Iran or between Russia and Ukraine. So it kicks the can down the road a little bit further, if you like, but I don't see there anything concrete coming from either of those discussions.
So how strong are the fundamentals that we're seeing?
For the fundamentals, I think we have to be very mindful that they are changing. I mean, certainly there's been a cooling in concerns around recession, risk to growth due to the rollback in tariffs. But by and large, I still think that those uncertainties remain. We are hearing it loud and clear from the Fed. They're saying we need to see more information. We need to wait. June, July, too early. And that fits in terms of we're still 50 days away from the pause now from reciprocal tariffs. So that's starting to tick down. We still have a lot of trade deals which need to be negotiated. I can't imagine that they're going to all get negotiated, signed off before then. So we have the risk that these tariffs return to those levels. So it makes it very, very tricky at this point of time for anyone trying to formulate a view. It has to be a much bigger one.
It's interesting, you're tactically short on the yen, but bullish on gold. So can you explain that sort of dichotomy?
Yeah, absolutely. I mean, the gold trade for me has been a little bit of time in the making. It hit that 3,500 high. We weren't on board with that. Unfortunately, it went without us a good deal of the way. But with regards to the pullback from that 3,500 high back towards 3150, it was a very orderly, very corrective pullback, and I think a lot of that was to do with position flush, i.e. the fact that we started to see some of these safe haven trades beginning to be unwound because of the rollback in tariffs. Now, I think when we take a step back from that, we still have a lot of uncertainties, as we mentioned. We still have the US dollar under pressure. We have the US exceptionalism story waning. We have foreign investors wondering whether they can trust the US. And to me, that's a perfect time to be looking at when you should be taking some more exposure on gold. And that's what we did around this 3,200 level. I think it could push back up towards 3,500.
What's your view when it comes to the questions over, US asset exceptionalism then?
Trust takes a long time to build, and it's very easily broken, and that's one of the things which I keep, we all would like to go back to the pre-Liberation Day world where, and potentially before the US election when things were a much more known quantity, but things have changed, and I don't think there's any signs that the Trump administration wants to go back to that world. So it's something whereby the narrative has changed. We have to be mindful that there is certainly been a lot of money going into US dollar assets, US equities over the past 20 to 30 years. There is an overweight position there. Still, it doesn't take 4 weeks, 6 weeks to unwind those positions. And I think when you're an investor in Europe or potentially in other regions, China, etc., you're probably thinking about a way to reduce that exposure if you haven't already done so. So I have sympathy for that view.
If you take a look at some of the sort of more idiosyncratic opportunities around the region, what would you think is not getting as much play as maybe it should?
Well, you mentioned the yen for me, and the yen was a prime example. A week and a half ago, we had a very large squeeze in dollar yen up towards 148.40 from a double low down around 139.50-ish, and that was due to a significant position unwind. Investors were very long the yen because of the supportive fundamentals around the Japanese economy, and also due to a safe haven bid as well, if you liked. And that was all unwound. I think about maybe a third to a half of those positions were unwound. But if we are thinking that we're seeing a permanent rollback in tariffs, then we have to start looking at the BOJ potentially hiking rates at some point during this year. So I liked using that short squeeze in dollar yen to reset that position, looking for a retest of that 140 to 139.50 area. So that's one for me which I remain high conviction on.
The RBA obviously moved yesterday, less certain as to what the path looks like for the rest of the year. How does that inform what you do with the Aussie?
Well, I think yesterday, before the RBA, the discussion was whether it was going to be July and August, the follow-up cut, and now the discussion's turned to both, and whether there will actually be a supersized cut.
Yeah.
And the funny thing about the RBA, the next meeting comes a day before that expiry freeze or that pause on the 90-day reciprocal tariffs. So it leaves the RBA in this very uncomfortable position. They just don't know whether enough deals are going to be signed, tariff rollbacks are going to stay, or are they going to go back up to that 100% level on some of these countries. So it's a very uncertain period for the RBA, and I think we saw that. They discussed a 50 basis point cut. They also said that they would cut rates regardless of whether Liberation Day occurred. What does it mean for the Aussie dollar? Well, the Aussie dollar has been an incredible rebound from that 59.12 low we saw there in April. It has stabilised just below the 200-day moving average, let's say around 64.50 to 65. So we can't say for sure that it has bottomed, but for me, if it can get above 65 cents, 65.20, I think the Aussie can have another leg higher, due to the fact we're still talking about the end of this US exceptionalism, a little bit of loss of confidence in the US, and the fact that here in Australia we're a little bit isolated from these geopolitical events as well, which are certainly playing a role in investors' minds.
Tony Sycamore of IG Australia sticking around. Still ahead, Elon Musk tells Bloomberg he's committed to still leading Tesla 5 years from now while paring back his political spending. More from our conversation from the Qatar Economic Forum coming up. This is Bloomberg.
What they've done is changed directions multiple times, and I think one of the strengths of of our administration is that they are willing to pivot, when it's not going the way they like.
It is uncertain. Is this the new normal? We don't know, but this is where you need to hedge yourself for any situation.
$1 trillion US Treasury market is fundamental and systemic to to the global financial system, and there is no alternative for this point.
With volatility, you can actually grab a really good rate or a really good exchange rate to help. And look at new supply chains and look at also new technology, tech stacks, etc. So it will be a bifurcated world, and we're just going to have to live with it.
Some of the panellists there at the Qatar Economic Forum in Doha discussing trade and global markets. Well, Tony Sycamore, who's a market analyst at IG Australia, is still with us. And, at the end of the conversation before, we were talking about just the sheer degree of uncertainty for central banks, right, trying to model around this sort of situation. Do you think the risk of policy mistakes is higher than usual?
I think there is certainly the risk of policy mistakes. We just don't know what the end outcome is of tariffs, and we have to sort of play that into the equation. Neither do businesses, neither do consumers. We've already got consumer confidence at very low levels. Businesses have got a 90-day pause in theory, which is fast running out of time. They don't know whether they should be front-loading their orders, whether they should be employing people, whether they should be making plans much past the middle of July, and that makes it extremely difficult. So in that context, we know that animal spirits, when they're unleashed, they do run further than is expected. But when animal spirits start to be caged, start to be hindered, it can also have that negative multiplier effect, if you like. So yes, there's certainly some downside risks to growth. I mean, equities have bounced remarkably from those lows. I still think there's a lot of good news priced into equity markets, but in terms of where it leaves central banks, the Fed has been clear and consistent. They want to see more data. They don't know what the impact is on tariffs, on sentiment, on the overall US economy. Certainly we know recession risks have eased, but have they dissipated completely? And we won't know the answer to that until we start to see more of the hard data come through.
How worried are you about the slide at the longer end of the bond market at the moment?
To me, it's an extremely important development. When I first started in markets, it was a bond meltdown back in 1994. I was on the floor of the Sydney Futures Exchange, and I'll never forget the importance which the bond market showed to all asset classes at that point of time. And there's just this unwavering grind higher in yields, whether it be in Japan or in the US. And part of that is obviously to do with the tax bill. It's due to the uncertainty around inflation. But we do know that there's got to be a point whereby yields can break some technical levels as well. And they weren't far away from that earlier in the week. And if we do start to see some of these big technical levels break, whether it be in the 30 years or the JGBs, we're seeing that now pushing to record highs, that draws in the momentum accounts, the trend following accounts. And then we start to get moves that aren't so much being reflected on fundamentals. It's just higher prices begets higher prices. So right here, right now, US yields are holding below those levels, but they aren't backing off either. And that's something which I don't think is going to happen immediately, just because the way the tax bill is likely to progress potentially to a full vote in the House this week, then it goes to the Senate. It could drag on from July to September. So we have this continual pressure supporting yields to the upside. Now, whether that turns into a technical break, like I said, we have to wait and see.
Tony, really great to have you on with us. Tony Sycamore of IG Australia. Let's take a look at some of the other stories that we're following this hour. And Qatar Airways CEO Badir Mohammed Al-Mir says the $96 billion deal signed with Boeing during President Trump's visit was a close one. Al-Mir spoke with Bloomberg at the 2025 Qatar Economic Forum in Doha about the agreement for as many as 210 jets from Boeing, including the 787 Dreamliner and the 777X.
It was, and at certain stage, it was leaning towards Airbus, then it went to Boeing. At the end, it was a very close call, and we decided to go to Boeing, who provided us with a better commercial and technical proposal. The reason for the order, it will cover the strategy of Qatar Airways till 2045. We'll start receiving the aircrafts from 2029.
Alphabet's Google will offer its AI mode in search to all US users as it tries to keep pace with new rivals. Google has been making big changes to its search engine to ensure that its core product remains relevant. That's as its decades of search dominance come under increasing threat from AI chatbots.
We want to get our best models into your hands and our products ASAP. And so we are shipping faster than ever. We have announced over a dozen models and research breakthroughs and released over 20 major AI products and features, all since the last IPO.
Westpac is reportedly planning to axe more than 1,500 jobs. This is its biggest downsizing in a decade. The Australian Financial Review, citing sources saying CEO Anthony Miller has asked managers to find ways to cut 5% of staff across most teams within the next few months. It says the cuts are part of the bank's ambitious cost reduction targets. CATL's founder and chair, Robin Zeng, is pushing back on the US accusations that the company poses a national security threat. Zeng told Bloomberg that the company has never sold any of its products to the military or for warfare. He was speaking in Hong Kong after the stellar debut of CATL's secondary listing. The US Defense Department has added the Chinese battery giant to a blacklist of companies with alleged links to the PLA. Take a look at oil. Of course, that has been the dominant market story of the day following this one CNN report that Israel is preparing for a potential strike on Iranian nuclear assets, with Brent crude seeing that rise of 1.5% over $66 a barrel. WTI there over $63 a barrel there as well. So all of this, of course, raising concerns about the fate of these Iran-US nuclear talks, the overall impact on the global crude market that is already expected to be oversupplied later in the year. So we're seeing that risk premium playing out a little bit. But of course, there were also already increasing sort of signs that these talks between the US and Iran were not going particularly well, given recent signalling from Tehran. So continuing to watch that volatility as it plays out in these energy markets. Coming up, Elon Musk on his future as Tesla CEO, his pay packet, and the impact of politics. Insight. Tesla CEO Elon Musk says he's committed to running the company and expects to still be there 5 years from now. In a wide-ranging interview at the Qatar Economic Forum in Doha, Musk discussed issues including his compensation, attacks on Tesla's showrooms and cars, as well as the car maker's sliding sales.
Europe is our weakest market. We're strong everywhere else. So our sales are doing well at this point. We don't anticipate any meaningful sales shortfall, and obviously the stock market recognizes that, since we're now back over $1 trillion in market cap. So clearly the market is aware of the situation. So it's already turned around.
But sales still down compared to this time last year?
In Europe.
In Europe, okay. And
yes, but that's true of all manufacturers. There's no exceptions.
Does that mean that you're not going to be able... Does that mean...
The European market is quite weak.
Okay, but you would acknowledge, wouldn't you, that what you are facing, okay, let's just take it as Europe, what you are facing is a significant problem. This Tesla was an incredibly aspirational brand. People identified with it. They saw it as being at the forefront of the climate crisis, and now people are driving around with stickers in their cars saying, I bought this before we knew Elon was crazy.
And there are also people who are buying it because Elon's crazy, or however they may view it. So yes, we've lost some sales perhaps on the left, but we've gained them on the right. The sales numbers at this point are strong, and we see no problem with demand.
So what?
And I mean, you can just look at the stock price. If you want the best inside information, the stock market analysts have that, and our stock wouldn't be trading near all-time highs if it was not. If things weren't in good shape. They're fine. Don't worry about it.
Okay. I was citing sales figures rather than share price. Well, tell me then how committed you are to Tesla. Do you see yourself, and are you committed to still being the chief executive of Tesla in 5 years' time?
Yes.
No doubt about that at all?
Well, no, I might die.
Okay, short of that.
I can't be see if I'm dead, so there's a slight amount of...
Does that mean that the value of your pay doesn't have any bearing on your decision?
Well, that's not really a subject of discussion in this forum. I think obviously there should be compensation for, if something incredible is done, that compensation should match that something incredible was done. But I'm confident that whatever some activist posing as a judge in Delaware happens to do will not affect the future compensation.
This is the judge who twice struck down the $56 billion pay package that was awarded to you. I think the value on the current value of stock options. Yeah.
Not a judge. The activist who is cosplaying a judge in a Halloween costume.
Okay, that's your characterization. I think yes. On the current value of stock options, I think the actual...
Justice according to the law.
On the current value of stock options, I think the value of that pay package stands at about $100 billion. Are you saying you are relaxed about the value of your future pay package? Your decision to be committed to Tesla for the next 5 years, as long as you are still with us on this planet, is completely independent of pay?
No.
It's not independent. So pay is a relevant factor then to your commitment to Tesla?
A sufficient voting control such that I cannot be ousted by activist investors is what matters to me. And I've said this publicly many times. But let's not have this whole thing be a discussion of my alleged pay. It's not a money thing. It's a reasonable control thing over the future of the company, especially if we're building millions, potentially billions of humanoid robots. I can't be sitting there and wanting to get tossed out by, for political reasons, by activists. That would be unacceptable. That's all that matters. Mm. Now let's move on.
Okay. Well, just one question.
Now let's move on.
Well, one question before we move on to other companies, which is that I wonder if some of what has happened to Tesla in the last few months, did you take it personally?
Yes.
And did it make you regret or think twice about your political endeavors? Because it
well,
is...
I did what needed to be done. The violent antibody reaction, and I'm not someone who's ever committed violence, and yet massive violence was committed against my companies. Massive violence was threatened against me. Who are these people? Why would they do that? How wrong can they be? They're on the wrong side of history, and that's an evil thing to do. To go and damage some poor innocent person's car, to threaten to kill me. What's wrong with these people? I've not harmed anyone. So something needs to be done about them, and a number of them are going to prison, and they deserve it. And more will.
You're referring to the attacks on Tesla showrooms, but I think...
Yeah. Firing bullets into showrooms and burning down cars is unacceptable.
Yeah.
Those people will go to prison, and the people that funded them and organized them will also go to prison. Don't worry.
But wouldn't you...
We're coming for you.
Wouldn't you... But wouldn't you acknowledge that some of the people who turned against Tesla in Europe were upset at your politics, and very few of them would have been violent in any way. They just objected to what they saw you say or do politically.
Well, it's certainly fine to object to political things, but it's not fine to resort to violence and hanging someone in effigy and death threats. That's obviously not okay. That's absurd. That is in no way justifiable at all, in any way, shape, or form. And some of the legacy media nonetheless have sought to justify it, which is unconscionable. Shame on them.
Let's talk about your other companies then and other business areas, SpaceX. I saw that you said in a speech at the West Point Military Academy recently that the future of warfare is AI and drones. And obviously defense is an increasingly booming sector with the state of the world at the moment. Do you see SpaceX moving into weaponized drones?
You certainly ask interesting questions that are impossible to answer. SpaceX is it's the space launch leader. So SpaceX doesn't do drones. SpaceX builds rockets, satellites, and internet terminals. SpaceX has a very dominant position in space launch. So of the mass launch to orbit this year, SpaceX will probably do 90%. China will do the half of the remaining amount, so 5%, and the rest of the world, including the rest of the US, will do about 5%. So SpaceX will do about 10 times as much as the rest of the world combined, or 20 times as much as China, and China is doing actually a very impressive job. The reason for this is that we're putting into orbit the largest satellite constellation the world has ever seen by far. So I think at this point, about maybe approaching 80% of all active satellites in orbit are SpaceX. And they're providing high bandwidth global connectivity throughout the world. In fact, this connection is on the SpaceX connection. So I think this is a very good thing because it means that we can provide low-cost, high-bandwidth internet to parts of the world that don't have it or where it's very expensive. And I think the single biggest thing you can do to lift people out of poverty and help them is giving them an internet connection. Because once you have the internet connection, you can learn anything for free on the internet. And you can also sell your goods and services to the global market. Once you have knowledge by the internet and the ability to engage in commerce, that this is going to greatly improve quality of life for people throughout the world, and it has. And I'd just like to thank anyone in the audience who may have been helpful in, with Starlink and getting it to approved in their country. And I think it's doing a lot of good on the countries that have approved it, which is, I think at this point, 130 countries are very happy with it. I don't currently anticipate SpaceX getting into the weapons business. That's not an aspiration. We're frequently asked to do weapons programs, but we have thus far declined.
Do you envisage SpaceX or indeed Starlink as a separate entity publicly listing in the near future or at all?
It's possible that Starlink may go public at some point in the future.
And what would be the time frame?
Starlink.
What kind of time frame are you considering?
I'm in no rush. I'm in no rush to go public. Public is, I guess, a way to potentially make more money, but at the expense of a lot of public company overhead and inevitably a whole bunch of lawsuits, which are very annoying. So really something needs to be done about the shareholder derivative lawsuits in the U.S. Because it allows plaintiffs' law firms who don't represent the shareholders to pretend that they represent the shareholders by getting a puppet plaintiff with a few shares to initiate a massive lawsuit against the company. And the irony being that, extreme irony, that even if the class they purport to represent were to vote that they don't want the lawsuit would still continue. So how can it be a class action representing a class if the class vote against it? And that's the bizarre situation we've got in the U.S. It's a dire need of reform. As anyone who's run a public company, you've experienced this. It's an absurd situation that needs to change.
Tesla CEO Elon Musk, they're speaking with Bloomberg's Misha Hussain at the Qatar Economic Forum. Up next, Asia Decoded joins us with their outlook on India's growth prospects and why they think the timing of a trade deal with the US is key to the conversation. This is Bloomberg.
I think the Fed right now should not cut should not cut interest rates, and it's in a very difficult position to try to balance these things. There's a great deal of uncertainty, and there is a deterioration in sentiment, but really the actual economy. So they're in a difficult position.
Bridgewater Associates founder Ray Dalio there speaking to Bloomberg about the Fed's rate path. Joining us now to talk more about the outlook for the global economy is Priyanka Kishore, is the founder and principal economist at Asia Decoded. Priyanka, we kind of have settled into this level of uncertainty globally as a new normal, right? This uncertainty about where the tariff situation is going to head. So many trade deals still up in the air. The inflation picture is uncertain. It's quite a set of challenges for central banks right now.
Yes, that's absolutely right. And what we are seeing is that central banks in Asia, at least, are taking a cautious wait-and-watch approach to this uncertainty, probably taking a leaf out of the Fed's book. But I personally think, that given the skew towards downside risk to growth, inflation is back in comfort zone in this part of the world. And there really is much less uncertainty around the fact that tariffs are bad for growth. Central banks could actually go in for a more aggressive easing, irrespective of what the Fed does.
There's also, of course, geopolitical overlays as well, right, with this report over Iran and Israel today as just being the latest example. How are you factoring all of this in when it comes to the growth outlook?
Yeah, that's a tricky one, right? Because until now, oil had been coming off, and that was positive for this part of the world. Most of the countries in Asia are actually net oil importers. So a spike in oil prices hurts them on multiple fronts. It hurts them on inflation, on the external account, and eventually on GDP. And that makes it more tricky for the central bank. But it's too early to say. We still have to monitor the situation to see how sustained this spike might be, because on the whole, the global growth demand picture is still weak, and that could dominate the oil price outlook.
What are the implications for emerging markets?
I think from an Asian perspective, if I look at emerging Asia, the challenges are in terms of just navigating all these uncertainties. We are in a sweet spot at this point of time in terms of inflation back in comfort zones for emerging markets, not just headline, but also core, which makes it easier for the central banks in some sense to monitor growth risks more closely and focus on the different channels, not just the direct exposure to US, but how are your overall exports going to fare? How is the knock-on impact on domestic demand going to be from these channels? And where do you actually stand in terms of China plus one? Could you see some benefit from that or not? But really on one side of the scale, the balance of risks are more towards growth. If we do see another escalation between Iran and Israel that leads to a spike in oil prices, it does become much more challenging in terms of managing measures from a policy perspective.
When it comes to the economic outlook for India, tariffs obviously playing a big part in this. How tricky is it to be able to get a real picture of the outlook before a deal is reached?
It is difficult in the sense that tariffs impact India's growth directly to some extent, yes, but one could argue just 2.3% of GDP is exposed in terms of India's direct exports to the US. But what does not then take into account is that what are these exports to the US actually? They include items like gems and jewelry, and they include things like textiles. Together, these sectors directly and indirectly account for 50 million of jobs in India. And so you could see that even if the direct impact on exports to the US is reasonably small for India, the knock-on impact on domestic demand that comes from this could be outsized relative to the total share of GDP, exports in GDP. So one has to take these into account, and overall the growth outlook has dimmed, I would say, considerably with this coming into play. And given that India's chief driver of growth, private consumption, remains subdued.
How do you weigh up the impact of some of the uncertainty when it comes to the US dollar in this region?
So we have obviously seen unexpected strength in the US dollar, expected strength in the US dollar at the start of the year, and then unexpected weakness as globally people lost confidence in the status of dollar as a reserve currency. Now I think this sentiment is being overdone, and we are potentially re-entering a phase of broader dollar strength coming into second half of the year, which is more consistent with the US policies that are being talked about. And to that extent, I think we will see renewed weakness in Asian currencies into year end. But on the other hand, we have also seen our central banks being pretty proactive when it comes to managing the currency. So I would not look for currencies weakening to concerning levels.
Priyanka Kishore there, who's the founder and principal economist at Asia Decoded. We do have some breaking news just crossing the Bloomberg coming from China's Foreign Minister Wang Yi, having met with Pakistan's Deputy Prime Minister, saying that China supports Pakistan safeguarding their sovereignty. And of course, we have heard this rhetoric before, but perhaps a little bit more split when it comes to that support. Previously, China had said that they broadly support India and Pakistan in properly addressing those differences to achieving a lasting ceasefire after this recent conflict. Wang Yi now speaking after his meeting with the Deputy Prime Minister of Pakistan, saying that China supports Pakistan safeguarding its sovereignty. And of course, this comes after we've seen really the most serious military confrontation between Pakistan and India in half a century earlier this month. We're still sort of approaching that situation with a fair degree of trepidation in terms of some of that geopolitical risk. Wang Yi now speaking after holding meetings with the Deputy Prime Minister and calling China a staunch friend that will always firmly support Pakistan in safeguarding its national sovereignty and territorial integrity. Well, ASUS co-CEO Samsung Hu says the Taiwanese PC maker may have to raise prices by about 5 to 10% in the US due to tariffs and costs tied to supply chain diversification. Speaking at the Computex 2025 event in Taipei, Hu told us how ASUS is managing trade risks.
Our supply chain strategy is built around flexibility and diversification. So we are working very closely with our manufacturing partner to ensure that we have production capabilities around the world, including the US. That's very important. And that's why we also very carefully and very closely monitor the latest situation about the tariff policy and assess the impact to our supply chain.
What's the level of tariffs that you anticipate as a business? What's the base case scenario that you see?
I think, the recent US-China trade deal announcement is a positive development. So I think we are somewhat confident about the future of the global trade deal stability. However, I think the tariff policies still continue to shift.
Early this year, we had an interview with ASUS, and you were talking about sending products to the US to get ahead of the tariffs in the fourth quarter of last year. Where are those inventory levels now, and how much of a buffer do you have as well?
Okay, that's an interesting question. Actually, we prepare those inventory levels since last quarter four. And usually we build the inventory level between 3 to 6 months, depending on different product category.
So then how much of a safety net do you have right now? How many months?
Still 3 to 6 months at the current moment.
Without having any sort of price changes to your products?
Well, in terms of price, right, you are asking?
Yeah.
To be honest, we expect some price increase, maybe need to pass on to our consumers. Yeah, especially for those products reliant on effective components. And at the same time, you know that we have long been diversifying our manufacturing footprint to address the tariff concern. And naturally, this will also bring extra logistic costs. So that's why we have started the price adjustment with our channel partners based on the condition to maintain our margin balance and based on the market acceptance.
So what's the increase you're expecting then on the price, and which products as well do you think?
The price increase in really vary quite a little bit depending on different product category.
Could you give sort of a range then of the percentage that you're expecting to increase?
It highly depends on the extra logistics cost and the possible tariff rate going to imports. So usually it's 5% to 10%.
5 to 10%
yes.
Price increase. Okay.
Yes.
And is that just for consumers in the US, or do you need to also apply this globally to try and offset?
Only in the US.
Let's talk about the demand for AI servers or AI PCs as well, because these are two different business lines for you. What are you seeing right now in terms of customer or business appetite?
Well, you're asking about the demand of AI, such kind of, okay. We continue to see strong demand for AI. That's because, AI is no longer optional for business, since it really helps them to improve operation efficiency and to stay competitive.
That is it for Insight. And tomorrow, catch our exclusive interview with JP Morgan CEO Jamie Dimon. This is Bloomberg.